Hey traders, Raghee here. I don't have an intro for this week in the markets live. That would sound so serious. I'll have to find something better. Hope everyone's doing great. Happy Father's Day. Happy Sunday. Hope everyone's having a great long weekend. Of course, we have the bank holiday tomorrow for Juneteenth. And I will be doing charts and coffee. A lot of you know we do charts and coffee on Thanksgiving. And I don't know that I've ever done Christmas Day or New Year's Day for that matter. But we will be here for charts and coffee tomorrow. And so again, hope everyone's having a great Sunday and happy Father's Day. All right, so we have a week coming up on the heels of what was FOMC, and ultimately now that we are past that non-decision rate decision, the question now is, do we see the hike in July? We can talk about that much later. I think to start talking about it now, where it's more than a month away, we're about 5 weeks away from that. Probably not that important at the moment. We do expect, though, if there's going to be a hike, that is the probability at the moment. So tomorrow is the bank holiday, so that we don't have any major economic releases tomorrow on the 19th. Although on the 20th, when the markets reopen, we'll have building permits, housing starts, not major ones, but if there is a hot zone that's worth listening in on, it's going to be FOMC member Williams on Tuesday, 11:45 a.m. I love the timing on that one because it is after we go pencils down on our day trading Tuesday morning, so it should not create a lot of volatility or hesitancy. In front of that, at least we'll have a good hour probably before traders start having to think about that 11:45 a.m. Eastern FOMC member hot zone. Moving into Wednesday, well, this is when things get interesting because now we go into the 21st, Humphrey Hawkins testimony. And just when we thought we had a break from Powell, not so much. Here we go, starting day one of 2 days of testimony. And you'll see going into Thursday, well, if Powell's speaking, why don't we all speak? Now, remember, going into FOMC, they can't say anything. Not really. It's the blackout period. So they're all chomping at the bit. So we go into day 2 on Thursday and existing home sales. But let's be honest, nothing really matters except for whatever it is that Powell's going to say. Friday, we wrap everything up with the manufacturing and services PMI. Now, any of the PMIs, 2 things to remember. When I think about what category a PMI falls into in terms of the 3 major economic baskets or pillars, like I like to call them, it's the inflation pillar. And that's going to be on that Friday morning. That's going to be probably the most significant hot zone we have without Powell, right? Without Powell. So we'll keep an eye on that one, and that'll wrap up the week. So our shortened week, 2 out of 4 of the days are going to have Powell, and 3 out of 4 of the days are going to have some FOMC member speaking. Good times. Not really. So this is what we've got. Although I'll tell you what, we had a week that was practically devoid of hot zones in terms of FOMC and not a lot of major economic data. And it was probably one of the toughest weeks that I can recall of the last couple, 2 or 3 months. So, hey, who knows if they're speaking and that's going to give us some clarity, who knows? Because the one week I thought we had a reprieve was probably the most difficult week that I can think of, maybe of this year, but definitely of the last couple months. All right. As always, gang, phone lines are open for your requests. Whatever questions you might have, type them in. We'll go ahead and take a look at an early look at the open and see what we've got. Also, if you haven't checked it out yet, on Friday, I did a free video on symbols that I am liking going into this week. And, a topic that I get probably not that many questions about, although, I should, and that is reversion to the mean, right? How do we make sure that we're not sort of jumping the gun on corrections, that we're not getting too aggressive about how shallow a pullback we take, and at least we're being aware of where a reversion to the mean on the daily time frame could be, and what are the alternative levels that I would be open to buying at until we get that much more significant retracement. So there is that. So if you want to take a look at the way I'm managing the market right now, as we wait for a possible more significant move to the downside, that reversion of the mean, check out the video at the Simpler Trading YouTube channel. I think I called it reversion to the mean or something like that. All right, so let's get into it. You know what? Got a little tragic news here. I broke my favorite cup. I broke my favorite mug, the handle. I'm going to try to repair it, but not going to stop me from using it, because the coffee tastes just as good out of it at 6:06 p.m. on a Sunday. Yeah, really sad though. Oh, this is a really cool mug. It's a clay plant road mug I got from a member. Paul, if you're listening, love the mug. I am going to try to repair it. Sad story. All right, so let's get to it, gang. As always, let's get to the questions and whatever questions you might have. By the way, if you head on over to thisweekinthemarkets.com, I know it's a ridiculously long URL, but thisweekinthemarkets URL, you can get .com. You can get a $7 trial to our weekly newsletter. And we're going to dive into some of the hot zones. We're going to dive into 3 big narratives, what the trades are related to those 3 big narratives coming up this week. I think we know what probably 2 of the big narratives are. And taking a look at, obviously, Humphrey Hawkins' testimony, 2 days of that. And then what, if anything, the PMI might hold for Friday. Okay, so let's get to it. I appreciate that top spin. Yeah, smash the like button. Yeah, we might keep this show short because I know a lot of you are probably thinking, Rog, the markets are not opening tomorrow. You know, we don't really need to do that much. Maybe tomorrow we'll take a look at how Sunday was responding in other parts of the world. But remember, we're not going to get that baton handing off to the U.S., not in any significant way. All right, so let's get to it now. I appreciate it. Hello, hello. All right, so question here is Snap. Yep, let's go and take a look. Be nice if I spelled it right. See, my brain is already thinking we have a 3-day weekend, Rog. All right, here we go. Here's Snap. All right, so this question comes from Topspin. And Snap is still a sideways market. Snap is still very much a chop. The last time that we had an opportunity to get long Snap, Topspin was off the daily price movement range, that gray area, that gray zone on the chart, shot up into the gold zone on the chart. And you can see this move here is this candle from the 15th right there. And then on the 16th, we kind of floated around in nowhere land, waiting for either the gold or the gray to be hit again. But remember, as long as the green trend right here on the 60-minute chart, it's a 60-minute in the middle, by the way, or this chart to the left that I'm on right now. As long as you have a green trend, we have an uptrend. And as long as we have an uptrend, it's only long positions, only the long side. However, on the flip side, if we take a look at the daily time frame, what you'll see is we could be buying in the gray, we could be shorting in the gold. So I'm not ruling out a potential short. We've exhausted in this area before, and you can see it's based on that Darvis level from the pattern that was built on June 5 to June 6. And maybe we end up with a little bit of pressure in this area like we did before. If not, we'll focus on that gold area. So probably the trade with the most proximity Topspin is the short side. But obviously with the green grab candles on the daily, I'm a little bit more bullish than I would be bearish. And ultimately, I think the other thing to keep in mind is, where are we in relation to the 200? So one thing that would be a little bearish is the fact that we're still below $12.50 and the 200. Now, $12.50 brings up another point, and that is volatility zones are amazing. This is something that I think most traders have no clue is even out there, right? Historical volatility-based support and resistance. However, top spin, any stock under 20 bucks, any stock under 10 bucks, I would probably say, even more so than price, is price-based volume in terms of where support and resistance are. And then I would go to the volatility. So keep an eye on say the volume profile on Snap. All right. Okay, next up, question on the S&P. Sure. All right, let's take a look. All right, so I'm going to go to the daily time frame on the S&P. Let's see what we've got. S&P is trading at 3 ATR on the Keltner. Do I expect any pullback in the near term? So that gives us a buying opportunity. So I don't use average true range. Srinivasa, I don't use average true range. So instead of ATRs, I use PMRs. You might say, okay, what's the difference, Rog? An average true range is going to look anywhere from, and I'm not sure what setting on the ATR you have, my friend, but whatever that setting is, that's how many candles you're looking back. So for example, I'm just going to hypothesize maybe it's a 14 ATR. Maybe if you're on the longer end of the typical ATR setting, maybe you're at 21, right? Which means that ATR has been formulated based on the last 14 to 21 trading sessions. It's not bad. It's not a bad look back. When I look at PMRs, we're looking back on 6 months of price movement. So historical volatility really can't be extracted from 7, 14, 21 sessions. It's 6 months, right? So roughly, if you're thinking, well, Rog, what's the ATR on that? It's not quite the same. Well, it would be 100 and basically kind of a rough estimate of 120 days, but it's not even that. We take the next step, we start to segment out the typical price movement range according to day and week. So there's a lot of differences, but I use PMRs. That being said, we've been pushing the upper end of the PMRs for some time. So if you're wondering, is there any, I won't say correlation, but are they in any kind of agreement? Yeah, I wouldn't say that they're not in agreement because you can see how often we've hit the gold or even that dashed line right there that we hit on the 16th on Friday, so that is an exhaustive resistance level, right? Within the context of this uptrend. So do I expect a pullback? I don't try to time pullbacks. I just acknowledge when they're happening. And so wherever we pull back from, my main job is not to guess at where the top is going to be, but ask myself, would I be a buyer at, say, either the dashed line right there? That kind of, I know it's a little difficult to see. Let's see if we can't brighten that up a little bit. So that dashed line, so y'all can see it on the video. A little bit easier to see. Yeah, it's a little bit easier to see. Or on the gray zone itself, right? So you have that dash white line. There it is. Yeah, you can see that really well. Or the gray zone itself, which would line us up with about 4,400. So I don't know what's going to trigger the move lower. I'm not going to say I know where the top is. And I know that's not your question either, my friend. So I would say the level that I'm looking at is currently somewhere between 4,429 and 4,400. I would far prefer 4,400. So we'll see what we get on Tuesday. If we are going to get a pullback, I won't be surprised to see it correspond with the Tuesday or Wednesday Wednesday or Thursday Humphrey Hawkins testimony, right? When Jerome Powell testifies in front of the Senate Banking Committee, and obviously is going to talk about, he'll be peppered with questions, and obviously, what he sees in the U.S. economy with inflation, what their plans are for monetary policy will inevitably come up. So, yeah, I would say the buying opportunity would be there, but like most things in the market, we can't see around corners, but we can say if price reaches a certain zone, that's what we want to get going. All right. Somebody in SSM bought Shop late last week. So Coop, yeah, we just took a look at Shop. Yeah, and that was the video. So yeah, I'm definitely going to be keeping an eye on it. That was a video that I put in the, did somebody in SSM, we didn't send it out as an alert, but I did say, hey, let's keep an eye on it. Yeah, let's definitely keep an eye on it. I wouldn't be surprised if someone in the mastery, so SSM, by the way, gang, is the Sector Secrets Mastery. And if you look at how many times we've bounced into the gray zone. Yeah, there's numerous. Yeah, Coop, there's numerous times for sure. All right, next up is, did Nvidia reach a top? Seems like it's overextended. Let's take a look. Now, obviously, Nvidia had that giant move, right? But here's the thing. Nvidia was in an uptrend before the gap up of about 100 points that we saw on earnings from 524 to 525. So this is already an uptrend that obviously accelerated. So the question is, did it reach a top? I never look for a top in an uptrend, because I'm sure some folks thought it was a top on the 25th or the 26th or the 27th. And frankly, none of those have been true. So I don't know where the top is. And I think top picking such a strong trend, one that's surfing the wave of AI as well, one that has yet to really, well, I mean, in any way show that the uptrend is wobbly. No, I don't think it has in any way. Is there going to be at some point a pullback? Yes. However, what's higher probability to me is less than trying to find the ceiling from which we'll pull back. Just let someone else, try to find that ceiling. Let somebody else sort that out, because it's going to be a low probability play. What's going to be a high probability play, and my approach is going to be, let's wait for a pullback buy. Because look at how many times, boom, 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 boom. Look how many times we hit the daily price movement range gray zone, which was a buy. And you might say, Rob, we've hit the gold zone too. Yes, but the general direction has been up. So any of those buys had a far better chance at, benefiting from bullish trend and bullish momentum than a short. So I hope that makes sense. It's not that the short isn't important. It's just not one that I will engage. And I will never look at an uptrend and say, hey, where can I short? None of my tools are designed to do that, because I haven't designed a process where in an uptrend, I'm wondering where the top is, right? I'm not in the least bit curious where that would be, but I'm always curious where the support is, where another way to put it is where's the backbone, where's the spine of the trend. So is it overextended? I'm sure a lot of folks thought that on the 25th, and here we are, obviously another 60 points north of that. So yeah, I don't think in any kind of trend I'm ever going to think it's overextended, because also think of it this way. Trends are by their very nature imbalance, right? There's far more demand than there is supply, if you want to use that really basic economics 101 type look. Yeah. All right. Next up, path shows a volume ledge or buy zone for a bullish swing. You know what, Gru? I do not have my trading view running right now. But having said that, a couple things that I could add to what you mentioned, which is it has a volume ledge and buy zone. So what else do we have? We have the 200 propulsion at 17. We have Darvis level at 17. So I love that they're stacked. And then we also have an uptrend. So what's not to love? So I don't know where the volume ledge is, group, but if it's lining up with that 17 area, that would be a fantastic confirmation of two price-based levels. So propulsion is a fast and slow exponential moving average. The Darvis is a price-based pattern. You've got the trend, which is also price-based. And then if you can throw, some volume in there, that would be fantastic. That would be excellent confirmation, 100%. All right, Damien asks, how many books do I have? Oh, Damien, I have no clue. I have another bookshelf roughly this size in another room. So a lot. And I've actually downsized quite a few times, and I might be downsizing. Yeah, I might be downsizing sometime again. Thanks for the question. All right. Let's see here. PLTR. All right. Yeah, again, I love that you're looking for the volume levels. So PLTR also in an uptrend. PLTR also has Darvis. So if we can see volume around 1480 to 15 and the Darvis working together, that would be fantastic, right? That would be fantastic. That would be what I'm looking at. All right, the Lorna bot wants to take a look at gold. All right, so let's take a look at gold. I don't know how many of you know, the Lorna bot is actually, I know most of you know the Lorna bot from the Sector Secrets Mastery, the Futures Room, and a whole host of other rooms. A lot of folks don't know Lorna bot is an active seasoned trader. And, her and I talk about the markets all day long, and I'm looking forward to a whole lot more assist and feedback and ideas coming from the bot in the coming weeks. We have some cool things we're working on with the TradesViz platform, especially for our Sector Secrets Mastery trades. So a lot of cool things we have in the works there with Lorna bot. All right, next up is good evening. Yes, good evening. Canadian Grand Prix. Yeah, that was pretty good, right? Right, Montreal. That was I'm a Verstappen fan. I've been a fan of his for a bit. I'm a huge Christian Horner fan. I guess the Horner part sounds so cliche, but yeah, I've been a big fan ever since he was working with Vettel way back when. But yeah, I'm definitely a Red Bull fan, Verstappen fan. He's just running away with the season. Yeah, he's just running away. It looked like Perez was going to give him a little bit of a run for it, but yeah, this kind of happened last season too, right? And then I don't know what's happened. Perez has fallen off, but Red Bull's doing pretty darn well with the Constructor Championship, and I don't even know what the drivers looks like. He's got to be far and away ahead, but it is kind of cool, I will say. We've had quite a few podiums where you've got three championship drivers in the 1, 2, 3 spot, which is crazy, right? How many times have we now seen Verstappen, Alonso, and Hamilton on the podium? That's pretty wild. That's pretty cool. All right, now that we're some weeks away from major earnings, how do we prepare? So basically what I'm going to do, yeah, it's a great question. Let's do this. This time of year, what I like to do is jump on over to Estimize. And by using Estimize, where is my Estimize? Where the heck is it? Welcome to training. Gosh, where is my Estimize? Hang on. No. Oh, there we go. All right, so I'm going to log into my Estimize here. And what I like to do, as we get closer and closer, why wouldn't it let me log in? There we go. Log in. And what I like to do is any earnings that are you kidding me? Could someone please explain to me? Oh my gosh. I really just want to punch someone in the head with these human things. Are you kidding me? I'll have to do this later. Why on earth do I have to know how many bridges, motorcycles, bicycles, or fire hydrants, or whatever this nonsense is? Oh my gosh. Slide the image to complete it. At least this one's kind of unique. Are you kidding me? All right, that looks about right. Oh my gosh. Incorrect? Oh yeah, I didn't slide it right. I hate these things. There we go. Oh my gosh. Anyways, whoever's listening, if you're working for Estimize, stop the madness. Stop the madness. Anyways, I'll usually go on over to Estimize. Let's go back on over there. And I'll follow the stocks that are heavily weighted in the averages, the major averages, as well as the sectors. And I'll follow them. And I want to be aware. So the question was, how do we prepare? First, I'd like to sign into the site that I like so much, but some geek on the staff decided we need to solve puzzles before we get in. Next thing you know, they're going to mail us a Rubik's Cube that we've got to solve and mail in to get into the darn websites. Anyway, now you know it makes me salty. So I'm going to follow the symbols that are heavily weighted, and then I'm going to go ahead and look at which ones are trending, preferably up. And I'd like to focus on that about 4 to 6 weeks before the actual release. And I far prefer. Now, I know, gang, as soon as we get to earnings season, I know that 90% of the symbols that I'll get in Charts and Coffee are going to be stocks that have earnings that week or the day after. And I get that there is a huge appeal to trading stocks that are going into this massive volatility event. But I will tell you, if you take a look at the probabilities, it's far better to trade these in the run up to earnings in the 4 to 6 weeks before the actual event, especially if you're a directional buyer of calls and puts like I am. If you're a directional debit player, it's far better, because otherwise, going into the week of or a few days before earnings, the scales tip in favor of traders who write premium, which is, again, fine, but it's a very binary way to play. It's very much kind of a lottery scratch-off ticket where we're saying, hey, we're going to find the volatility, we're going to write the premium, we're going to be on the right side of the trade, and the premium moves lower, and then we collected the credit and we win. I wish it were that easy. I wish it were as easy as strangles and straddles and writing premium and taking advantage of vol crush. The only thing that I really do like, that I find does have some validity, is a strategy that really capitalizes on the validity crush or vol crush after earnings, because implied volatility goes way up, earning comes out, and even those traders who have options that were in the direction of the move will sometimes find the premium value got smushed, got crushed, because they overpaid from an implied volatility standpoint. Here comes earnings, and even if you're close to the money, sometimes you see that vol crush. So anyway, for any number of reasons, I prefer the ramp up, and that's how I like to do it. I know it's kind of a long answer, but that's the way I like to do it. Yeah. All right. So let's see here. So bought one to look at gold. Yeah, let's take a look at gold here. We'll wrap up our session. My cat is in dire need of something. I don't know if you can hear the cat on the mic. Cat said there's a holiday tomorrow, so pay attention to me. All right, so gold. I think gold is going to be one of those symbols that I am going to prefer to be on the long side of. We are north of the 200 propulsion, and I do like real yields eventually falling. And I do like the idea of buying in the gray zone and taking profit in the gold zone, right? Buying the gray, take profit in the gold. And that's ultimately what I'd like to be able to take advantage of. So I need days like May 24, May 30, June 1, June 2, right? June 7, June 8, June 13. It's a huge one on June 15. I need something that looks like that, where price gets down into that gray zone, and then we can take advantage of the move higher. And then ideally, bonds are doing something similar, right? Ideally, bonds are moving in a similar way, where they too are reaching some sort of support zone or daily price movement range, something that will take us higher. All right. All right, gang. Bot says my mic is quiet today. Oh, is the volume low today? Or yeah, the mic's pretty good about muting out my cat. I have a special cat filter on the mic. All right, gang. Have a great one. I will be here tomorrow for Charts and Coffee. So we'll talk more about what we see. But remember, the U.S. markets are not going to be open. We will see futures moving. We will see Forex moving. My futures folks and my Sector Secrets Mastery folks, we are going to have a special currency and Forex session for 45, 60 minutes tomorrow after Charts and Coffee in those respective chat rooms. I'm getting a lot of requests for that, so we'll take a look at that tomorrow since the Forex markets will be open. Be good to each other, gang, and I will talk with you all soon. Enjoy what's left of Father's Day. I'll see you tomorrow.